So later on in the video, we'll get a bit more structured and I'll do some stock analysis. But for now, I just want to talk. Is there such thing as like a morally wrong stock? Am I a bad person for investing in sinful companies, for lack of a better term? Where do I draw the line? Should I even be worrying about this? These are all questions that I've been asking myself, and this is a topic I've honestly been struggling with for weeks now. I love investing. I've been really enjoying doing stock analysis and even teaching myself more and more metrics to look at when evaluating a stock. And I've been enjoying making videos. These are all like some of my favorite things to do. And when I see a great stock or company that is just a great investment, a great potential investment, I want to dive in head first. But then sometimes this struggle comes in like, man, I don't know if I want to support this. I remember seeing on YouTube not that long ago some people were talking about Lockheed Martin. It was probably dividendology, knowing me, but I kind of just avoided it. And I don't even know if Lockheed Martin is necessarily a bad, sinful, morally wrong company, but I do know that the United States contracts them and uses their weapons and technology to kill a bunch of people. And I guess I could make the argument of like, oh, I avoided that. I earned myself some brownie points for, not investing in a company that may or may not be bad. It's honestly hard to judge. You don't even really know. But, I don't roll like that. I'm not going to entitle myself to something because I made one maybe good choice. But at the same time, is it even my fault? This is kind of the way our economy's been set up. If you want to be financially sound in the future, you got to invest now, especially with the way inflation's been going. And investing in Lockheed Martin wouldn't even necessarily be the same as saying I support what the US government is doing. They're two different entities entirely. This has been a topic that's been permeating my brain, and I had a talk with my friend yesterday at the gym about it. And I've been on Reddit threads as well, trying to find other people's opinions, just trying to find some type of, I guess, confirmation bias to honestly make myself feel better. But, a thought that my friend and I kind of came to the conclusion of, and some people on Reddit have come to the conclusion of, that I really like is at the end of the day, you got to worry about number one. You got to worry about yourself. I mean, I literally just made a video called Nobody Cares, Just Invest. But in order to be able to do that, it sucks, but you gotta support some of these companies. I mean, I guess it's maybe not 100% fact of life. You might be able to work around it, but I want to be investing in stuff that I think are going to be making me a lot of money. I mean, that's what investing is for at the end of the day. And I want to put myself in a better position. I want to put my family in a better position. And ideally, I want to do that as fast and as efficient as possible. And I know time is your friend in investing, and I have a long time horizon, but that doesn't mean I want to dilly dally with low risk, low return stuff because it's better for my soul. And, maybe that's a bad, scary road to go down and way of thinking. But again, nobody else cares about you. If someone else was in the same position, they probably wouldn't think twice. But that brings me to the topic of this video, United Health Group. Now, they've been in the news a lot recently. Their CEO just got murdered, and their shareholders have been suing them because of the way they kind of reacted with the whole murder thing. And both of these things have been just absolutely plummeting the stock price. But the reason I've been avoiding them, the most likely reason of their CEO being dead, and probably the reason why they're like the biggest insurance company, at least in America, is because their claim denial rate is like 32%. That means one in every three people who try to use their company, it gets denied. And that's just terrible. I mean, why are you even paying for insurance? And one thing that, somewhat gives me solace, maybe it's some confirmation biases, it doesn't really take into account certain metrics. And an example someone on Reddit gave said it's kind of like comparing police shootings without differentiating between justified and unjustified shootings. But regardless, I'll say it again, at the end of the day, you got to worry about yourself. And with that being said, let's get into some UNH stock analysis. So right now it's down a lot because they're getting sued, their CEO died, and they missed on their latest earnings call. But overall, over the past 5 years, their revenue has had very steady, consistent growth. Their operating income has been growing over the past 5 years as well. And it took a slight dip in 2024, but now it's back up to its highest point it's been. Their net income has seen pretty consistent growth over the past 5 years, aside from, again, 2024. It was a pretty big outlier. It dropped significantly, but trailing 12 months, we're back. And actually, this most recent quarter was very, very good. Their net income is up 630% in the most recent quarter. Their return on assets is up 500%, return on equity up 500%, and their earnings per share is also again up 500%. Their net margins are also up 500%. They did issue $3.9 billion worth of debt in the most recent quarter, but they're also sitting on $30 billion of just straight cash. So debt, I'm really not worried about. And honestly, that'll help them weather this storm they've been facing. They've also bought back $2.6 billion worth of shares in the most recent quarter. And overall, their diluted weighted average shares has been going down pretty consistently over the past year. So you're making non-cash dividends as well. If we take a look at their dividends, my favorite part of this whole process, they have a starting yield of 2.21%, which is actually pretty high. They have a 10-year dividend growth CAGR of 18.8%, 5-year dividend growth CAGR of 14.2%, and 3-year dividend growth CAGR of 13.1%. Now, I know that doesn't sound good because as of recently, it started to go down a little bit. But again, outlier year in 2024, it wasn't the greatest year for them. But especially with their targets now and their expected growth, I can totally see them bouncing back and raising this dividend CAGR again. Their cash flow payout ratio is 24.2%, which is what I like to see. That's an extremely healthy payout ratio. And they've been paying dividends for 22 years and growing dividends for 15 years. Again, like to see it. We got consistent history of paying and growing dividends. And just to throw on some sentiment analysis, I've been watching some YouTube videos. People are thinking that we're pretty much pricing in all the worst possibilities, and it's kind of only up from here. Their CEO has put in some pretty solid growth targets. And I don't pay for Seeking Alpha, but I can also look at the Seeking Alpha analysis articles, and pretty much every single title is saying, like, let's see, United Health Group, Mr. Market has got it all wrong. United Health Group, it's time to be greedy while the market panics. Um, United Health Group isn't a falling knife, things like that. Everybody thinks it's just a great, great buying opportunity right now. And everybody says, rule of thumb, good company down 25%, buy it immediately. Right now, United Healthcare is down about 50% from its highs in June, which is just ridiculous. It's at such a cheap price right now. But let's not go by that. I spent a lot of time building some valuation models from Dividendology, and I'm going to try my hand at evaluating this company. And hopefully, I can get good at this and comfortable with this and faster with this, and I can, obviously get my videos out quicker, but also just give y'all more valuable videos. So I'm going to take a break from the gameplay real quick and just show y'all this. I built a discounted cash flow model. I built a classic Grams valuation model. I built a multiples valuation model and a dividend discount model. And I put them all together and averaged them out just like Dividendology does. And that brings us to a share price of $436.04. And right now, the current price is $314.20. So below intrinsic value, according to my calculations, which is good. 20% margin of safety brings us to an acceptable buy price of $251.36. Now, that's a little more aggressive than Graham's classic evaluation. If you wanted to go with classic Graham margin of safety, you would go with 35%, and that would bring us to $204.23. But that is pretty, it's a pretty big margin of safety. And if you wanted to go the opposite way, with only a 10% margin of safety, we see $282.78 as an acceptable buy price. And right now, we're not super far off from that. And if we wanted to throw a little bit more technical analysis onto that, we are approaching a major support area on the monthly time frame as well as the 200 EMA, which is just a moving average line. And that's sitting at about $278, $280 a share. I could definitely see it bouncing off of that. So just a quick recap. Financials have been good and growing. Sentiments, everything is very bullish. And from a technical analysis perspective, it's reaching a very good support line. And we're under intrinsic value. So everything's kind of coming together and pointing bullish for me. That's what I see. And whether you're buying it now or a few days or weeks from now, I think it's a very good buying opportunity. And it's a very good buy and hold long term dividend growth stock. This is one I'm definitely going to have in my portfolio for a long time. It also gives me a little bit of diversity into the healthcare sector. But, anyways, remember, not financial advice. But if you enjoyed the video or you learned something, consider leaving a comment or subscribing. I really love the comments, and good luck with your investing journey.